Good morning, good morning. Wishing you a wonderful Wednesday ahead. Welcome to today's episode of Morning Wealth. Powell's comments reverses losses. Earnings update from Home Depot, Macy's and HSBC, and Square's 170 million Bitcoin play. The trading day didn't start well, with worries over the rise in treasury yields again unsettling stocks, particularly the big tech names that have fueled the rally since last spring. But then Mr. Powell began his testimony before Congress, where he again made it abundantly clear that despite hopes that a fading pandemic will vastly improve the economic prospects, the Fed has no plans to start tapering its monthly bond purchases or raising its overnight interest rate target anytime soon. He said, once we get this pandemic under control, we could be getting through this much more quickly than we had feared. And that would be terrific. But he added on, but it's not done yet. The job is not done. He said he wouldn't expect inflation to reach troubling levels and wouldn't expect any increase in inflation to be large or persistent. Here's an interesting statement. Inflation dynamics do change over time, but they don't change on a dime. So we don't really see how a burst of fiscal support or spending that doesn't last for many years would actually change those inflation dynamics, he said. Another statement that was important to process was, when we say maximum employment, we just don't mean the unemployment rate, he said. We mean the employment rate. Now, Mr. Powell said the Fed monitors several measures of the labor market's health, including the percentage of population that is employed. That share was at 57.5 in January, down from 61% before the pandemic. So the third dynamic now, we have inflation, unemployment rate and employment rate that we are looking at from the Fed. Stocks bounced back on the back of these comments. The Dow finished up 15 points. The S&P 500 rose 0.1%. The tech-heavy Nasdaq fell 0.5%, but earlier it was down almost 4%. Over in the bond market, the 10-year Treasury finished the day slightly lower at 1.36. Earnings update. Home Depot and Macy's said pandemic-fueled shopping trends have continued in 2021, driving demand for home improvement and home goods. Executives at both chains said consumer spending could shift in the second half of the year, depending on the course of the health crisis. The two retailers have been on the opposite sides of the COVID-19 pandemic. Home Depot's revenue has increased 20% in the company's latest fiscal quarter as Americans spend more time and money fixing and renovating their homes. On the other side, annual sales at Macy's have tumbled 30% as consumers bought less apparel for going outside, including to work. However, Home Depot declined to give a full year forecast, citing uncertainty about the coronavirus and the distribution of vaccines and fiscal policy. Macy's chief executive said the apparel business could recover towards the second half of the year as more people get vaccinated and start planning events like weddings and going back to workplaces. Macy's expects digital sales to reach about 10 billion within the next 3 years. The chief executive has been focused on reducing costs associated with digital sales, which account for about 44% of Macy's net sales in the most recent quarter. Macy's returned to a profit in the holiday quarter, its fiscal fourth quarter, after losing more than 4 billion in the first 9 months of the year. Home Depot's revenue in the fiscal fourth quarter was at 32.36 billion, a 25% increase. The company's profits also rose about 15%. The home improvement chain's digital sales continued to accelerate, jumping about 83% year over year in the latest period as more shoppers used online ordering during the pandemic. HSBC reported on Tuesday, reported full-year earnings for 2020 that beat expectations and announced a dividend payout for the first time since the COVID-19 pandemic. Europe's largest bank by assets, which makes most of its revenues in Asia, said its reported profit before tax for 2020 fell 34% from a year ago to 8.78 billion. The beat analyst expectations of 8.33 billion, according to estimates compiled by HSBC. Reported revenue was 50.43 billion for the year, down 10% from 2019. HSBC's latest financial report card was released as Hong Kong markets were on a lunch break. Its Hong Kong listed shares jumped 5%, when trading resumed. Moving on to Square. Square reported quarterly sales that missed estimates, with its business primarily driven by demand for Bitcoin transactions within the company's Cash app. Shares declined about 4% in extended trading. The San Francisco-based payments company also announced it purchased roughly 170 million worth of Bitcoin, and the cryptocurrency now accounts for about 5% of total cash equivalents, and marketable securities. Chief Executive Jack Dorsey is a vigorous advocate of the cryptocurrency. Couple of other developments on the tech side. Palantir slumped after filings overnight showed executives, including co-founder Stephen Cohen, sold shares. Separately, it announced plans to expand its relationship with 3M. One tech stock that's doing well, Snap, which turned positive after an executive said it expects multiple years of 50% or greater revenue growth. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.